Hello, Amanda Chozek with Guardian Wealth Advisory Group. There is a lot happening today with the election results coming in, the market activity, so we fully expect to be back in your inbox again very soon with more reflection and thoughts on what is happening. In the meantime, we will jump into today's message. Last week's data release included the third quarter GDP, which showed that the economy grew by 2.8% from July to September. Sure, we grew, but it's a softer number than the expected 3%. Markets actually liked seeing the lower number because a slowing economy makes it much more likely that we will see another rate cut from the Feds. We also got new employment numbers last week, which were a little bit of a mixed bag and told a somewhat conflicting story about the current jobs market. We also saw the latest personal consumption expenditures report, which came in at 2.1%, very close to the Fed's inflation target of 2%. But if you look a little deeper into the numbers, core expenditures are at 2.7%. This number removes food and energy, both of which experience price volatility and shows inflation isn't decreasing quite as much as it might appear. Finally, the tech giants Meta and Microsoft both delivered weaker than expected earnings last week. All of this combined to push markets backward, and we ended October on a down note. Now, the good news is that things rebounded slightly on Friday to start November off right. Markets will be hyper-focused on this election and the Fed's meeting where they will decide whether or not to cut rates again. If the election results get delayed, it might increase some market volatility. We may also see some movement in the market if the Fed makes an unexpected decision about rate cuts. So that is it for today. Again, we will be back with you again very soon to talk about the markets and how they reacted later this week.